Hi, hello, this is Rebecca from Seawolf Sustainability Consulting. Today I'm doing my second short video about finance and some very introductory general statements. There are three things I'm going to cover. Number one, what's a security and different types, how you measure returns, and then some features to look for sustainability. So firstly, what's a security? Well, a security is usually with a monetary value, and it's about the right to own or the claim to own a project or a company. Secondly, there are different types. The two main types are equity, so for example shares, or debt, and that means fixed income. And debt is essentially like an IOU. So you're buying a promise to be paid back sometime in the future. And you also have hybrid options, so a combination of debt and equity together. But primarily there are those two different types. And then lastly, how to measure returns and things to look out for sustainability purposes. Well, the size of the equity market of shares is around 124 trillion US dollars all around the world. Very often equity and shares are traded on stock exchanges. And what investors and financial professionals look for is often growth. So if I put my money in this company and buy these shares, will that money grow over time? Will those shares grow over time? And the value of those shares. There's different objectives, but that's one of them. Now with debt, often this is issued in what's called the primary market. So when debt is issued by a company. Debt markets are often organised and managed by banks, and they're around 120 to 130 billion US dollars, so smaller than equity markets. And primarily as a debt investor, when you're buying debt, and let's say in primary, so it's just being issued, you'll be thinking about, will I get my money back at the end? You're giving your money, and then the question is, what are the potential risks around losses, and how certain am I that I'll get my money back at the end of this investment? Now looking at different features for sustainability, there's a so-called spectrum of capital, so different types of securities, different types of investments have different objectives. And using that spectrum of capital and equity markets, quite often equity markets today, some funds will integrate some form of E, S and G, so environment, social, governance. And what that really means is looking at what are the risks around environment, social and governance, and will those risks impact my returns? Roughly sort of 40 to 50% of AUM in mainstream markets will have some form of ESG risk analysis. And that could be as simple as looking at the governance of the company, as an example. That's different to impact investing. Impact investing really means investing with an intended objective to have a benefit on people and the planet, and that's much smaller. So that's circa 2, 3, maybe 1% of AUM today. So really, when you're investing with a positive intention to make a change or to have some sort of sustainability benefits on the world via this investment. And then with debt, there's different types of debt. So for example, there are green bonds where the use of proceeds for that debt or for those bonds goes to specified projects. There's also particular debt such as blue bonds, where it could have projects which are with ocean conservation. And there's also sustainability linked debt. So the fixed income or the debt is from a mainstream company or a mainstream project, but it has some sort of features or KPIs which are linked to sustainability. But that's quite different to use of proceeds, where there's really that dedicated use for these green or blue or other types of sustainability projects. So it's really important to look for what's the stated objective of this investment or of this security, if there is one, and to really understand how that will be measured, how that will be validated, and what routine progress reporting and other types of reporting and transparency you can see to check that along the way. I'll leave it there for today. It's a very short summary. Thank you. Bye.